Morning. Guten Morgen. Where's my coffee? Oh, way up there. How's the sound? Testing 1, 2, 3. FX Street. All right. Let me get a sip of coffee in. How do I look? Do I look good? Look at that. Cutting it tight. Oh, on this side. Cutting it tight. Cutting it tight this morning. So, FX Street, my name is Wayne McDonell. I'm here for Trade Non-Farm Payrolls Live. This is the 200th and 16th month in a row that you and I have gathered here with FX Street. I appreciate you, FX Street. 216. How close are we to 18 years? Getting there, huh? Almost 18 years? 18 years, and then he found it wasn't his. 18 years. Should be versus what can be. We don't know what the future is, but we do have access to the past, so we can look at things fundamentally past. We can also look at things technically in the past. We can get some good hardcore data, but remember, the past does not predict future results. Investing is risky and not appropriate for everyone. Even Elias. So anyways, let me know how it can help. I've been trading in the financial markets for well over 20 years. Before that, I was a venture capitalist investing into the private markets. Very cool. In 1991, I started working in the nonprofit world. 1991, 1992. And I'm still with that organization today, which is kind of cool because, oh my God, that's pushing 30, 35, 40 years? I don't know. That's a lot. Cool. So I'm a Forex trader. I like stocks and bonds and commodities. So really, I'm a financial markets trader. I'm also an investor. I run a group called the Council of Investment Advisors that helps manage real money, my money, in a pension fund scheme. Yeah, where we manage the money like an endowment. And people are learning, and they actually invest my money, which is pretty awesome and I don't know, as real as you can get. And we're going to look at this S&P 500 chart because it's got some real concerns for me, and therefore we would need to do something as a council. Now, why would I teach people how to manage money like an endowment? Well, I actually oversee 3 endowments now for the nonprofit world. So I manage my money like I would manage other people's money, which is cool, which is conservative, ultra, 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 ultra conservative. But because of financial engineering, still has a great return. Cool. So if you want to know trading, like, Wayne, how do I scalp, spot, swing, position, carry trade? I can teach that. If you want to know how to construct and manage portfolios, we can talk about that. And then risk-adjusted performance analysis, we can talk about all of that. I don't know, icing on the cake. I passed the Series 3 examination by the Commodity Futures Trading Commission back in, I don't know, I'm guessing 2005, 2006. So I know fundamentals. I also have a macroeconomics degree from Harvard. So I know a little bit about economics. And today is a big economics day. So just, again, if you have, I don't know, an economic bug chewing inside your ear, ask the question, and perhaps you shall receive some form of answer. But look, I am a humble servant. You're the boss. I'm here to serve you. I do not recommend any prop firms, but I'm going to. So I just got back from Europe, by the way. Thank you, Europe. Europe treated me wonderfully. The people that took care of me and my family while I was there in the various cities were wonderful. We had nothing but great experiences. Very cool. And Europe, just so you know, it's cheap in Europe. Be careful if you come to America. We have much, much higher inflation. Yeah, I know the Fed says it's 3.9, but it sure doesn't feel that way. 3.9, 3.8, 3.7, 3.5, I don't know. America seems like it's 30% more expensive than Europe. That's how it feels. Which is wild because many years ago when I visited Europe, Europe was very expensive. And now I'm like, 26 euros for breakfast for a family of 4? I'm like, dude, that doesn't buy you anything here. Not even fentanyl. But anyways. Sebastian says, Tradars or Quantbox seems the same. Well, one only does fundamentals. Sebastian, one only does fundamentals. The other one only does technicals. So they seem the same to you, but they don't do anything alike. Now, the only thing, and we'll go through these things, but the only similarity is they use artificial intelligence, but radically different data sets, different brains, if you will. They don't speak to each other. Get? So anyway, at some point, so going back to this question, at some point I will recommend a prop firm, but I don't do it now. Okay? But let me know if you're interested. I'll probably set up an email list where you can sign up for the wink, wink, nudge, nudge when Wayne does something in the prop industry. I'll let you know. Just trying to get this chat in there a little better. But I don't have that today. So anyway, so macroeconomics, all of that, great. So let's get on with it. Quite a few people, well, we had a question here about Tradars and Quantbox. So we're going to look at Tradars today, but we're also going to look at Quantbox today. And these are both of these firms are using artificial intelligence to help trading and investing. It automates all your research for you. So imagine you have A technical analyst working for you, that's Tradar's. I'll bring it up here. Okay, this is your technical analyst working for you. You're a portfolio manager at a hedge fund. So you have a staff, right? You have a couple of people working for you doing the grunt work because you make decisions. You make or break everything, right? Like you're the money maker. Okay? So you have a couple of kids working for you, right? So you have a technical analyst, and this person just does the grunt work on the charts all day, every day, looking at 7,500 charts in real time, analyzing all of them, and then bringing a handful of opportunities for you every morning or every evening, whenever, or throughout the day. Here's 5 or 6 you should check out. The other 7,490, ignore them. Okay, so that's what Tradar's does. And we'll take a look at this because there's a real powerful tool in here when it comes to volatility. And, non-farm payrolls is going to bring some volatility. And it actually looks in the past. So we can take a look at that. The next thing is on your team is you're going to have a fundamental analyst, right? You're going to have a quant working for you. Well, Quantbox is your quant in a box. And it is artificial intelligence that automates all your macroeconomic research and comparative analysis, but also looks at real-time market sentiment because you want to look at what's happening right now, not even today, like now, versus the long-term big picture. So you can find, is there congruency or not? Is there trend or not? Because what most amateur traders miss is the underlying intrinsic trend. What might be happening over the last 2 hours may be counter trend, or what we've seen for weeks and weeks and weeks and weeks now is there has been no underlying intrinsic trend. Therefore, much of what you normally do that worked, you might have found over the last 5 or 6 weeks, what you normally did that worked suddenly wasn't working very well or not at all. And you're like, what? What's going on? What's wrong with me? Why do I keep losing money? And what you don't see is the underlying intrinsic trend is gone. So you're just floating out at sea in the waves, but there's no current below you. There's no wind above you. And you think maybe you have the wrong kind of raft. Maybe your sailing techniques need to be changed and you need a whole new technique for sailing. And you're like, no, there's no force. There's no underlying force. There's no trend. There's no trend. It's not you. You're using normal tactics. You raise your sails and your ship doesn't move. Well, it's not you. It's not the sails. It's not your sailors. It's not the design of the ship. There's no wind, okay? So if you knew that, you would adjust your strategy accordingly. You wouldn't be doing what you always did and have found success. You should adjust, and you need to know this. And Quantbox does this beautifully. Oh, my God. And just one heads up, in particular when it comes to Tradars, if you use a typical Forex broker that B-books you, I would let me say it without saying anything negative. If you use a broker that B-books you, and that's very, very, very typical, I highly suggest you use an ECN because there's no B-booking in an ECN model. That just doesn't happen. The way that an ECN model works is you place a trade and it goes straight through the broker and into the interbanking system through a liquidity partners, straight through processing. And there's, a little fee, a little gas is added to that, which because they have to pay for all their stuff to run their business. So, but it's straight through and it's instantaneous or nearly instantaneous, right? In fact, most other brokers use a different business model than that. And they benefit when you fail. That's all I'm going to say. So if you're going to use some of the tools I'm going to show you today, I recommend using an ECN, and I recommend Trader's Way, so you can take a look at that. So anyways. So let's start with the fundamentals. Because, well, non-farm payrolls is a fundamental event, isn't it? So let me log into the database. The home says, hey, what does Quantbox say about gold? Why don't you pay some money and find out? So easy. It's so easy. If you want to know, just pay the money. Quantbox.co. All right, so let's take a look. I'll zoom in a little bit. Okay, and so that right what you're looking at is a combination of long-term and short-term analysis. This is just a little snapshot of what's going on. Biddy, okay, back at 66. Okay, not bad, not bad. Remember, some people think this is going to go to 5 million. So 66 might be cheap, 66,000. Euro dollar, look, it's been here for, what, a month? Just pretty extraordinary. Today is a very disconcerting day. Yesterday, when I looked at the S&P 500, I set it up for a crown pattern. And then I checked the charts a couple hours later, and the stock market was up almost 1%. And I'm like, okay, well, we're on a shoulder. We're right on the shoulder. This is where if we're going to crown, we're going to crown. And then, holy schnicker-schnocker, at the end of the day, we went from +1 to -1.5. I'm like, whoa! That is, but right on the shoulder, like right on the money. Dude, right on the money. So, holy smokes, the only thing that can save the S&P 500 is, what, a bad number today in non-farm payrolls? So we'll take a look at that. But does everybody understand the concept that a bad number is good today, but a good number is bad? Andrew said sonars work perfectly on Aussie. I can't see the other one. Sorry, I can't squeeze the chat in. It doesn't fit, but I guess we can try. It just doesn't quite fit. Now I can't read it. It's so small. You know what I can do to see this better? Oh, I can probably get that out of the way. I can bring up the actual chat myself. I can't see my webcam's in the way now. There we go. I have chat over here. Let me move this chat a little closer so I can actually see the chat instead of looking at the one you see on YouTube. All right. Roderick says S&P 500, or Tradar's was on point with S&P 500. Cool. Yeah, remember, it's not right or wrong. It's just doing technical analysis, right? So, but I appreciate the positive feedback. Okay. Okay. So anyways, so we need to understand that a big non-farm payrolls number, and we'll say anything over, let's say 250 or above, is very bad news. Lots of people getting jobs. Very, very bad news. So dollar will get strong. Okay, treat me right. It's so easy. Okay, you got me, treat me right. If the number is 250 or higher, the dollar's going to get strong because lots of good jobs is bad. I know it doesn't make any sense. Okay, it's behavioral finance. Now, if the number is bad, so let's say 130, 140, 150, that kind of stuff, that's going to be good news. Because we'll look at the rate of growth and the rate of change in jobs, but we'll probably then look at subcomponents like wages and stuff like that. And over time, it would be assumed that the wage growth would start to slow. And that's all bad news, which would be good news for the stock market. And in that case, good news means the dollar will weaken. And amateur traders get all this flip-flop. They think good news is good news. And then, which some of the time is true, but not in these market conditions. And then the second thing is they think good news means the dollar gets strong. No. So therefore, very often newer traders just get everything flip-flopped. So good news is bad news, and bad news makes the dollar strong. And so if you can't make those connections, this is why you probably get trampled, right? Trampled in the crossfire, or the stampede, I should say. All right, down here are the few things that seem to be bullish when and you can do a deeper dive into this data. But the only thing bullish right now is USD CAD, USD Yen, and oil. Now, I've been bullish on oil since the middle of February. And I'm telling you, March, April, May, and June, I'm always a bull. Can anybody here confirm that? March, April, May, and June, I, Wayne McDonell, am always bullish on oil. Always. So that means I'm either buying oil or I'm not buying oil. But if you can't make an intelligent decision like that and have that level of clarity, then you're going to struggle as a trader. And people that have known me for 20 years know this to be true. Back in probably 2006, my quantitative analyst, Kurt Worley, so even in 2006, I had a quant. We're using Quantbox. Okay? Quantbox is less than $100. What is it, $79? It's $80 a month. I paid Kurt Worley a lot more than $80 a month to do my research for me. So Quantbox is more affordable than actually hiring a human being, right? He had a master's degree in applied statistics. So he cost me many thousands of dollars a month. Well worth every penny. Quantbox does the same kind of stuff for $80. Anyways, going back to that, in 2006, I'm thinking, he did some quantitative research on the oil industry and identified, going through 50 years worth of data, at what point oil peaks. And since 2006, I know when to buy oil and I know when to stop buying oil. Now, I can show you that on Quantbox, and now you know. But that took a lot of research. Okay? So anyways, oil's bullish. Yeah, well, where were you when it was 65? Well, now, okay, it's on its way up for sheer. All right. Now, what about the bearish side? Pound Aussie, pound dollar, Kiwi dollar, Japanese stock market. This used to be hugely bullish. Okay? And Nazi, look at, it's already bearish on Nazi. Oh my gosh. Oh my gosh. Now, why? Why does it think this way? Well, I guess I can show you that, and then we'll come back to some of the other stuff I wanted to do. But when you look at the score chart summary, it shows you how it gets to these conclusions. And so, like, let me zoom. Why is it not letting me? There we go. So when you can look at some of these things, okay, and like, well, how did it get so bearish on pound Aussie? How did it get so bearish on pound dollar? Well, you can see there's a lot of pound bearishness, right? And maybe some of this, like pound CAD, pound Swissy, is moving its way down towards bearish. Maybe pound yen is moving its way towards bearishness. Well, that's what you should probably be trading now. But how does it make this conclusion? So Quantbox looks at the commitment to traders report, retail positioning, 20 years of seasonality, which is the trend in peaks and valleys throughout a year, which I was talking about where I had Kurt go back through 50 years worth of data to find the peak and valley in oil. 50 years. And then look at all the averages in those peaks and valleys and come out with a buy and an exit. Well, Quantbox does that, and we call it seasonality. It does technical analysis. It's not actually technical analysis. It's statistical analysis. You know, the simple stuff, right? You know the simple stuff? Okay. Where's my drawing tool's not working. Why is my drawing tool not working? Oh. All right, I have to kill my drawing tool. I suppose I'm going to use a drawing tool somewhere. All right, Control Alt Delete, Task Manager. It's weird that it just stopped working. Where's my Epic pen? Come on now. End task. All right, let me start it again. You're still here, right? Yeah. So all these questions you guys are asking, things like, hey, pin the market. You're like, what's my view on Aussie CAD? Just join Quantbox. You can ask it questions like that all day, every day, and it'll give you a rational thought on that. So it'll gather all the macroeconomic data for Australia. It'll gather all the macroeconomic data for Canada, and then it'll do comparative analysis quantitatively and spit out an answer for you. So you wouldn't listen to some idiot on YouTube. Okay? Don't ever ask some live streamer on YouTube for financial advice like that. What's my point of view? Who cares? I might be a nutcase. I travel on an Australian passport. Maybe I have hometown bias, but I'm also Canadian. So I don't know, I can't make a decision. Who cares? Okay? But Quantbox will tell you quantitatively. It doesn't have an opinion. It doesn't have a bias. Okay? So anyways, going back to the trend reading, okay, it looks at all the numbers. Let's say these are all the prices over time. And then what it's going to calculate is the mean over time. So it'll do this, and once it starts adding up all these things, you inevitably get a trend. Okay, the average. And so you do the y equals mx plus b. Okay, remember this from 5th grade? Okay, so now you got to break this into a grid because you have a y and x axis. So you break this into the grid. Okay, y and x are the axes, b is the intercept, and m is the slope. You guys remember this from 5th grade? Okay, and you find that this m, rise over run, is a positive integer, right? Yeah. How positive? And that's how you get a positive reading. This has a slightly negative integer. The slope is negative. This has a much more negative slope. So to get a positive slope, you would have something like this. To get a negative, so you're just measuring, rise over run, and then what do? Then you calculate the variance, and then you go the variance, you take the square root of the variance, and you get your standard deviation, and therefore you can take the standard deviation and the slope of the mean of the prices and do a linear projection. So now you can estimate the future price based on what's happened in the past. Now we know the past is constantly changing, but it still gives you a projection to know where on the map you are, but where on the map you're going if you keep going in the direction you're going and at the rate you're going. You see? Okay. Okay, so anyways, so you get all of this data, and then you add it up and you get a score. And these are the few things that are bullish. Look at Dollar, CAD, bullish. USD, yen, bullish. Oil, bullish. USD, South African rand, bullish. Okay? Kiwi week, CAD week, pound week. Okay? My favorite right now for selling is the Swiss franc. Okay? But anyways, let's get back to reality. Oh, there goes gravity. Mom spaghetti. All right, check this out. Check it out. You ready? On the monthly basis, the market looks slightly bearish. On a weekly basis, the market looks quite strong. I mean, strong. Wait, strong risk off. I need to change it. That's so funny. Strong risk off. Thanks. Thanks, developers. Anyways, let me look. Let me refresh this. Okay, let me reset this. All right, so very bearish. See, it's strong risk off. It's so funny. Anyway, strong risk off and slightly risk off. Okay, -2 on the long term. Okay, -5 on the short run this week. And in that case, you might be selling selling the stock market, selling Kiwi, selling CAD, selling Euro, and selling Aussie. Okay, and you might want to buy Swiss franc, buy yen, buy dollar. Now, I'm going to supersede this because this is just simply a machine. You and I are humans, and we can think much more complexly. We just can't handle large sums of data. So right now, the Swiss National Bank is weakening its currency. So I would look at this and say, do I want to buy Swiss franc? Well, I understand in a risk-off moment you would deleverage, and deleveraging might increase or would probably increase the Swiss franc. But I don't think I want to do it now. Depending on the technical patterns on yen, I might do that on yen. I might buy yen, and dollar makes total sense. So what I said today is if we get a good news on non-farm payrolls, like 250, 270, 280, that is bad news. And I said when things are bad, the dollar's going to get strong. Well, we already have a strong bias on the medium and long term. So this would go -5 or 6. This would probably go -3 or 4. And in that situation, I end up buying dollar. But I already told you that. And the stock market would fall. But I already told you that. The one also to think forward a bit, in this case, I made a decision on the ranking of should I be bullish on gold or should I be bearish on gold in market conditions like this. And what I'm looking at here is gold might go up if there's signs of inflation. But if this then leads to a collapsing economy, then when your children are hungry, you don't go out and buy gold. Okay? And so this could change. So you might rank gold different. Remember, this isn't just some rule that came out of the sky. I made gold bearish there. I could have easily made that bullish to say, well, if it's bullish because high inflation is changing the Fed policy, which would then negatively impact the market, then what I'm doing is I'm fitting the data. Do you understand that? It's like back testing until you get the result you're looking for, but you already knew what the past did, so you keep tweaking it to get the result you want. That's not what I'm intending here. So in this case, I just have to know that, well, if it's high inflation changing Fed policy, which then would delay the cuts, which then would disappoint the market and change the valuation models and lower the price of the stock market, well, that inflationary pressure might actually be bullish for gold, but only in this case, but not in all cases. So you still have to be smart and beautiful. I know. Okay, cool. And then we could also look at things like the scatter plot, which is great. And this just shows you the biggest mover, the Japanese stock market just getting crushed here. So let's get out of that. Let's get rid of the stock indices. Everything up here is up, and Quantbox understands it, predicts it, and is happy with it. Okay. South African Rand performing very well today. Sorta. Okay. Sorta. Okay. And that was unexpected. Quantbox, when you look at it, doesn't expect that. So that's right. Bearish, but unexpected. And everything here is up today or right now, and that is not what Quantbox expected. So everything in the bottom left quadrant is good. Everything in the top right quadrant is good. Quantbox expected it. It performed just as expected. And then this stuff is out of position. So these might actually be the trades you make later today because they're out of position. Okay. Taking a look at our calendar. Today's right. So we have Canadian jobs and we have U.S. jobs. So you can trade both the U.S. dollar and the Canadian dollar today. And then later today, since it's Friday, we are updating our Commitment to Traders report so that you can see the change in the stock of capital global, well, in the United States by institutional investors. But then you can also analyze the new flow of capital. Like, is it still moving into the S&P 500? And is it still coming out of New Zealand? Right? Like, wait, you didn't know money was coming out of NASDAQ last week? You didn't have this data that there was a 7% change in capital flows in NASDAQ? You didn't know there was an 8.27% in capital flows out of New Zealand dollar? You didn't know that? Well, how could you possibly trade if you don't know where the institutional capital flows are going? Maybe you should. Oh, God, wouldn't that be interesting? So money was definitely going into gold, definitely going into Bitcoin. Okay? But this might change, and we will find out in a few hours at the end of the day. Okay? So that's what Quantbox does and a whole bunch more. So when somebody says to me, Wayne, what do you think about Aussie CAD? Look, I don't think I ever trade Aussie CAD. There'd be rarely a time when I say, you know what? I wonder what's going on with Aussie CAD. First of all, they're cross pairs. And then second of all, they're both commodity pairs. So I'm like, I have no freaking clue. Like, who cares? But anyways, let's take a look at it. Well, technically up and seasonally. Okay, so right now the market's going up, Aussie CAD, but the 20-year average says it's about to plummet. The 5-year average says it's going to plateau. You look at the comparison of GDP between the two economies, inflation between the two economies, unemployment between the two economies, interest rate differentials, okay, the carry, the COT data, which is the institutional positioning. So like 60 or 70% of institutional investors are short CAD and 80 are short Aussie, and retail's 50-50. Like, why are you looking at this currency pair? It's like probably the worst thing you could possibly be concerned about. This is horrible. Okay? It's horrible, but it's kind of ever so slightly maybe turning up, but may not last long. So it's neutral, but maybe ticking toward bullish. But dude, you gotta, there's so many assets for you to be tracking, right? How could you possibly track all these pairs? Well, Quantbox does it for you. So you might want to look at some of these bullish pairs or these bearish pairs at the bottom. Start with that and then try to figure out, well, what about these neutral pairs? Like I see pound is weak. I see pound is weak. So maybe you want to look at pound CAD, or I don't know. Like you got to zero in better. Okay. Well, I don't know if it's two dogs with fleas, but it might be one dog with two fleas. Okay? But I'm trying to get you guys to focus on what matters now. I don't know the future and I don't know what's right or wrong, but if you're looking at the wrong direction, you're looking at the wrong asset and you're putting money on something that doesn't fundamentally make sense, well, you're probably not going to get the outcome that you expect. And so if you had a quant working for you, you'd be able to drill into that much more quickly. Well, and things like knowing the difference in monetary policy at the central banks might help you zero in on what you should be doing. Okay. Quick look at the labor market here. Looking at euro dollar, just looking at, right, NFP. So the previous NFP, 229. Okay. But it came out 275. That, right? That's not good for the euro dollar. Here it is here. Okay, we went 229, then we jumped to 275. That's really good, but bad for the euro dollar down. Here's the employment change in Europe, month over month. Okay, headline in Europe, 6.5, pretty huge. Where in the United States, we're still below 4%. The Fed probably wants to see this jump above 4%. That would be a big news today, so we want to look at that, okay? Okay, so there's the non-farm payrolls. It was 229, then we jumped to 275. If we get anything in that neighborhood, I'm telling you, that's not going to be good for the stock market. Jobless claims, they're ticking up a little bit, which might indicate this is coming down, which is what we want. Okay, but a rising NFP is going to be strong for the, right? Strong for the dollar. And then unemployment rate, again, we want to track these things. We want to see this move up above 4%. Okay, let's zip over now. Oops. To Tradars. Hopefully I got a login here. Oh, just so you know, hang on. Where was that? What was I doing? Oh, will it let me go back here? Oh, I'm going to go in circles now. Oh, yeah. This is what I want to show you. Just look, the basics of this service I'm about to show you are $19 a month. To have a technical analyst give you between 8 and 12 trade plans every day. So if you just want to try it out or you don't have a lot of money, I made this one for you. Okay, it's 61 cents a day. Just want to point that out. Like, it's ridiculously cheap, but quite good. I promise you that. All right, so let's go back here. Oops. So just quickly, what Tradars does is all your technical analysis for you. Okay? So this came out 19 minutes ago. You see? If an ABCD Fibonacci pattern identified today at 8 o'clock this morning. This pattern is still in the process of forming. Possible bearish move, blah, 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 blah. And it gives you entries and targets and projections. But you can do this in crypto. This one came out 20 minutes ago again with Ethereum. Here's Litecoin. Okay, 20 minutes ago. It does stocks. So AMD, Pfizer. Look at, like, I forgot to scroll down. It's looking at, it looks like a lot of stuff 17 hours ago. So they don't come out. I mean, they come out when they come out. It's not overwhelming because that's what came out yesterday. But my point here is what you don't see is the 4,950 assets that are not worth looking at, like that Aussie CAD. What do you think about Aussie CAD? I think you're thinking about the wrong thing. Here's commodities like gold, XAU, slightly bullish setup 21 minutes ago. Okay? But see, that's on a 30-minute chart. Here's another pattern on the 4-hour chart. So you might have, a market open trade followed by a swing trade. It does silver, it does Brent, it does, WTI, very cool, and it does all the stock indices. But that's not what we're going to do today, because this isn't predicting the future. It's just doing technical analysis for you. Okay? Now, what I want to do today with non-farm payrolls is this tool, and this is the kind of stuff like if you're be-booked by your broker, they're not going to like you having this data. Okay? But nonetheless, let's look at this. In 8 minutes and 23 seconds, we have non-farm payrolls. What it did is it looked at the calendar. This is the AI at Tradars. Okay? A sonar looks through the calendar and looks at everything on the calendar. Then it looks at every single event and checks, is there volatility? And if the answer to that question is yes, then it goes back years and years and years worth of all those individual news events, looks before the event and after the event, looks at the volatility, and then looks for patterns in the volatility against all the USD pairs and on multiple time frames, the 1 hour, the 2 hour, the 4 hour, the daily. And if on any of those pairs, on any of those time frames, on those specific news events, if there's a reliable pattern, it tells you here. Oh my God. Like, you can't, do you understand? Like, it's looking at millions and millions and millions of candlesticks going back years and years and years just on these specific events, looking for patterns. Do you understand, like, the processing power going on here? It's insane. So I can say, look, if the actual is less than 200K, so less than projected, this is what patterns it sees on these pairs on these time frames. So it'll say, so if it comes out 200,000 or less, here's what it's the patterns it recognized on the 2 hour, 4 hour, 12 hour, and 2-day charts. So it's saying for Aussie dollar, 100% chance of up on the 2 hour and the 4 hour. And you're like, wait. Well, it's not guessing in the past. So Wayne, can you prove this to me? How did it come up with this number? Oh, let me prove it to you. Here is the past. So if you're trading Aussie dollar, we can draw the following conclusions about the expected movement of Aussie dollar based on the last 12 NFP. Now, it's actually more than that, but anyways, in the United States, if actual is less than, 100% chance the 2 hour trend will be up. If it's greater than, 75% the chance will be up. How do you get to this conclusion? Okay, this is the event coming out in 5 minutes and 46 seconds. Well, prove it to me, Wayne. Well, here's what it did in March. Before NFP and after. This is just Aussie dollar, 15-minute chart. Here's what it did in February, before and after. Here's what it did in January, before and after. And over, and over, and over, and over, and over. And it's analyzing all the charts going back in time. That's why it's a sonar. It's looking what's beneath your feet. It's not projecting the future. It's just telling you, analyzing greater than or less than what actually happened to the Aussie dollar on non-farm payrolls. Now, if there was no discernible pattern, it wouldn't have told you. It would have just removed it. Well, what about euro dollar? What about pound dollar? It's analyzed all these charts on all these time frames, looking for patterns on all these asset classes, greater than or greater than or less than. And here's the cool thing. when this comes out in 4 minutes and 28 seconds, it'll get the data and then it'll delete everything that you shouldn't be interested in. Okay? It'll just delete. So let's say it came out greater than. It just delete all this stuff. You don't need to know about that. You only need to know about this stuff. And you can say, well, USD yen on the 4-hour chart, 87.5% of the time would go up. And you're like, well, why don't you show me Quantbox? Or sorry, Tradars. And here it is. It breaks it down for you. Results pending. It'll do the what was expected, what actually happened, the differential or delta between the two. And of course, it can show you all these patterns. This is actually what happened in the past and part of its analysis. So look at this in November. Okay, it came out 180, or no, it was expected to be 180,000. It came out 150, negative 30 differential, and the US dollar weakened. And what I told you almost an hour ago is if it came out less than expected, negative delta, I would sell the USD. And that's, well, this just proves it. Oh my gosh, can I get a whoop, whoop? Insane. Insane. So again, if the data comes out big, if it's a big number, that good news is bad news. And bad news brings the stock market down. Stock market coming down, it will increase the value of the USD or vice versa. Holy crap. Okay. Kyle, it does. Kyle, you get it. It comes up. He's talking about the email, the daily email. Let's see if I can bring one up. All right, so here's the Tradar's report. This is what you get for $19. Okay. So, okay. So it must be going into your spam. Okay. Okay, so today you got to worry about IVPMI. You got to worry about non-farm payrolls in the United States and the jobs report in Canada. Here's what the market is doing. Here's the trades, and I think I can zoom in a bit, right? Here are the trades for Apple, Amazon, Tesla, Google. See, 13 hours. It'll take 13 hours to get down to target. All right, it saw it on a 15-minute chart. Cool. NVIDIA, USD CAD, found it on a 4-hour chart. USD Swiss franc, USD yen. Okay, it'll take you 2 days, but that's what it's looking at. Found it on a 30-minute chart. Ethereum, this is from like an hour or two ago. The FTSE, gold, and that's it for today. That's it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 trade plans today, and it costs you 61 cents. No, Kyle, that's different. Kyle, you're talking about something different. Okay? So anywho. All right, so let's move on.com. We got about 2 minutes. Okay. Yeah. All right. If you got the number, go ahead and post it. If you got the number, go ahead and post it. I'm going to drop into a smaller time frame. Okay. Yeah, it's ridiculous, isn't it? So, do you remember what to do? Probably in the business of buying dollar today, probably in the business of selling the stock market today. That good news is horribly bad, horribly bad, horribly bad. Okay? You're probably buying US dollar, I told you an hour ago. Okay, thank you, moderator. The previous number was revised slightly, but no big deal. Nobody cares about that anymore. We wanted that to be significantly different, but that's about the same. But this is really, really bad. Lots of people got jobs. So we're going to have to look at some subcomponents too. Are we seeing wage inflation? All that kind of stuff. But that is nasty. That is bad news. Okay, I'll probably have to hedge later today in the stock market. Okay, and if it was this chart, was it this chart? No, I don't think so. I have to go further out. Let me go back to this 4-hour chart. Okay, SPXS is one hedging mechanism. So that, by the way, I planned all this out yesterday. This has all been planned out yesterday. Look at, I mean, no joke. This was even drawn before the news, right? Okay, we're looking at a lower high, lower low now. So maybe later we have sort of a capitulation and then down, but I am definitely in full combat armor here when it comes to what this just means technically. Technically. Now, the other thing, you know, I'm well known for pivot points. Okay, this was the price. Okay, we had for a potential top in the S&P 500 a long time ago. And it suggests, and it's a big part of, you know, technical analysis, is knowing where to anticipate the reversal pattern before the market reverses. Otherwise, you're always late. Yeah, well, okay, we knew that in January. That was our predicted top. So now that it reversed here, you know, it opens the gate where you're like, you know, this could drop. And I said it yesterday, by the way, right, at Investor Bootcamp, that this has the probability or possibility, we'll put it that way, of a 25% drop in the stock market. I'm not saying it will, but this pattern, if you believe in patterns, looks a lot like this. Okay? And so I don't know if that's going to happen, but if I thought that was a reasonable probability, and let's say I was managing an endowment for a nonprofit that needs this portfolio to produce, then maybe I should hedge here before it dwindles. What do you think I should do? What would you do if you were a manager of money? Okay? You have to recognize the significance of where you are and the impact of this money. In this case, money coming out. Okay? The Fed's not going to cut, and we already priced it in. So those who priced it in are wrong. So you do the math. The expected, okay, return of a stock is equal to the risk-free rate of return, okay, the yield on the 10-year T-note, okay, minus the beta of, okay, the expected return of the market. So we'll like the S&P 500 minus the risk. Wait, that's a plus. Okay, minus the risk-free rate of return. Okay. That's a beta. I know it's hard to see. Okay. Okay, when you do this, and you understand the relationship between, let's say, the Fed funds rate and the risk-free rate of return, which is a 10-year T-note, but if you just substitute, okay, it'll get you the same idea. So let's say the risk-free rate of return is equal to the Fed funds rate. So you can just do FFR, okay? But nonetheless, if you take a look at the S&P 500 and you subtract the risk, okay, investing into the market minus a risk-free investment, okay, what you're looking at is opportunity cost. Oops. Ugh. So hard to do this with. Okay, that's opportunity cost. So if, in this case, not cutting, but the cut has been priced in, then not cutting is a rate increase. So the cost of doing business goes up. And when the cost of business goes up in general, irregardless of the beta to the market, this stock will be less profitable. Okay, because, well, what's profit? Okay, income or revenue. Technically, it's revenue, okay? Income minus expenses, right? You know this with your own money, right? Okay, so think of it this way. You make, I don't know, you make 10 grand a month, okay? And you're going to make 10 grand next month because you have a job. And the month after, you're going to make 10 grand. You have a job. So your income is fixed, but you find out that your lease runs up and your landlord raises your rent by 20%. So your expenses go up by 20%, right? So what happens to your profitability? Has nothing to do with you. Just like this company, the expected return of a stock would fall if cost of doing business goes up. So what happens to your net worth instead of saving or investing that 20% of income? Because remember, that income minus expenses, so your money comes in and you pay your rent. But if your rent goes up 20%, you don't have that money to save or invest. So your net worth falls. Why? You are less profitable. So therefore, you go back to this. This is what we're reading into non-farm payrolls. There was a cut priced in. It might be wrong. It has to be priced out, which is equivalent to the Fed raising interest rates, not cutting. So it goes back up, which means it's more expensive for those companies. They're going to be less profitable in the future. And therefore, if you decided, for example, when you look at Corp A, let's say you have a crude version of valuation. Your valuation model is basic. You take, okay, income, so we'll do this revenue minus expenses is what? Profit. Okay. And then you say, you're going to then, for valuation, say the valuation of this corp is profit times 8 years. Now, someone might come out and say they really like this corporation. They would pay 10. Someone else might pay 12. But your valuation model says 8 years of profit will be equal to the stock price minus divided by the number of shares, right? And the value. the valuation. So if they're less profitable because expenses go up, then the profit is smaller, and therefore multiplied by, you get a lower price. If revenue went up more than expenses, then it would be slightly more, and the price of the stock would go up. Or if the expenses fell, like the Fed actually cut interest rates, well then 8 times P would have a higher stock price. Okay, the stock price of the corporation would go up based on valuation models. Okay, so right now I'm not going to exit the stock market, but there's a possibility. I'm only saying it's a possibility. And especially when you're doing technical analysis here, because that valuation model had nothing to do with technicals, right? So that's a valuation model. Then you go to technicals and you're like, well, we're in a downward sloping channel off of a pivot point, which is a projected reversal point, and we got our reversal. So it went up, then we got the lower low, then we got our lower high yesterday, which was just ridiculously on schedule. And so now your new move is, in the future, will you sell here? Or in the future, will you sell here if it goes up? That's what you should be doing. And you say, well, I don't know. Will it do that in the future? Well, we can do what Tradar's was showing you. Remember, 11 minutes ago, this came out, and we looked at like Aussie CAD, or Aussie versus US dollar, 2-hour chart, 75% chance of down. Okay. And here's the numbers. 200, it came out way greater. Okay. Huge delta, 2-hour trend, 75% chance. And then you say, hey, Tradar, show me how you made that conclusion. Right? We can draw the following conclusions about the expected movement of Aussie dollar based on the last 12 non-farm payrolls events in the United States. 75% chance that the 2-hour trend is down since the actual is greater than 200,000. And then you're like, show it to me. And you click that button and it just shows you the iterations. It remembers. See, it dropped and closed lower. It dropped and closed lower. Oops. Let's go back up here. It dropped and closed lower. So it just knows that it dropped and closed lower. You still need to be a smart trader, but at least it helps you analyze the direction based on the past. It does not predict future results, but it does lay out exactly what happened in the past. And here you have a day trade, a swing trade, and a position trade. Sweet. Okay. Sweet, right? So are you going to sell the rally? Well, you do you. You do you. Okay. If you're worried about this, okay, I analyzed all this a week and a half ago. I put this here. Okay. And it's so long ago that I can't even grab this. I'm going to try to grab this around and call it a top. So I'll have to do it from here. But you can see we already did it. Okay. And now here's the bottom. And now what you're looking for on NASI is a trap and break strategy. Okay, if you're a long-term bull, okay, you're going to buy here and hope it breaks up. Or at the very least, get out here. And then if it does break out, you catch the pullback and gone. If you're a bear, you've already sold the top because I don't know why you didn't sell it if you were a bear. Okay, and now you're hoping it's going to break, but it hasn't. But if it does, you're going to, okay? And we call that a trap and break. Okay? Cool, right? So by the way, while we're at it, okay. Hey, Wayne, I'm late. What's going to happen in the U.S. economy now? Nothing. It's going to be exactly the same. Phoenix, as I'm describing, well, I don't know him, so I mean, look, these are universal truths. Let me put it that way, Phoenix. Yeah, these are universal truths. There's nothing fancy about trading and investing. Okay? Usually, if you have somebody doing something fancy pants, it's nonsense. Okay? Trading and investing is logical. It's intelligent. You can plan months in advance. Okay? I sometimes predict things 6 to 12 months in advance. I know I know that I'm not going to buy the stock market in October, but I will in the third week of November. Cool. Well, it's helpful to know that now. Now, sometimes you get wrong. Okay, I wanted to wait to buy the stock market around now, the end of March, beginning of April, because I expected a stock market decline. But I also knew this year we face the risk of the early move because it's the fourth year of a political cycle, which I also knew. I talked about it. I did special webinars. I did many, many training events. Like, I'm not making it up now. We knew that there was a very high probability that this year's seasonality will not be accurate because it's looking at the aggregate of all years. It's not looking at the political cycle, right? And so we know that this year seasonality was likely to break, both in the early part of the year and at the end of the year. But next year we'll have normal seasonality. Okay? So, you know, the unexpected wasn't unexpected. It was highly probable. But to know that, and to know like next year we won't have that odd pressure, helps you plan accordingly. Versus just, you know, like, so again, going back to Phoenix's, comment about, hey, you're describing price action like somebody else. There is no other way to describe it. Except if you're listening to a 25-year-old on YouTube. Okay? Okay, with their rented house and their leased Porsche, but they're not paying $500,000 to send children to university. They're not saving millions of dollars for retirement, right? But they make a lot of money on YouTube. Well, good. They're children. So it should be boring. It should be straightforward. It should be logical. Okay? Wall Street, okay, is run by quants. It's run by algos. It's smart, it's intelligent, it's logical, and therefore it's plannable. And if you can understand other people's plans because of the logic, then you can prepare in advance, right? In advance. If you wake up every day looking for a trade, you're like, what's up, fellas? What are we doing today? Are we buying dollar? You're a liquidity event. That's harsh, but I don't have much time, right? Richard says seasonality is just past returns. Well, it's not returns, but I think I know what you're saying. But yeah, it's the shape of the market over time, the 5-year and the 20-year. Yeah, and it does a great job of that. But it's just one part of it. Huh? Oh, good morning, Adam. It's just one part. It's just one piece. But like, for example, what I'm talking about now is I know, and I have known for 20 years, the shape of, like, we'll go back to the oil market. Olin, I actually covered that in January. Okay. Okay. But okay. Going back, if you knew the normal shape of the oil market based on, let's say, consistent demand, and if demand changes, and very often it doesn't change much, you know, the world still uses a lot of hydrocarbons, right? But so it's almost fixed. It's not like people are standing around, they have oil and nobody wants to buy it. Okay? So the demand is usually there to some degree. Maybe it's 2% higher, maybe it's 2% lower, but there's going to be someone to buy your oil. So you fix that, or you keep it flexy and you can adjust. But here's the thing. What does vary over time is supply. And so I pulled data directly out of the government website, the EIA, right? The Energy Information Agency. And you can look at the normal shape of supply annually. And it shows you the distribution over 5 years of the supply. And then when you look at the distribution or the variance, and then you standardized it through standard deviation, because variance is just deviation. So then you standardize the deviation. Then you get a normal level, a range of normal supply month over month over month. Okay? Then you take it one step further. You have the normal range and then what is actually happening. Okay? And then you look at the shape of that market. And by the way, I can pull this up and show you if you want. Quantbox does it in a simple way. It doesn't need to be more complicated. The government gives you the extra layer of range, but I could easily find that. I usually have to stumble a little bit, but it's not hard. But it'll show you in normal scenarios when to buy oil and when to take profit on buying oil. Now, you could also cut or short sell or something, but that's not what I'm talking about. I'm talking about the shape of the market. Now, what is the shape of the market? What does seasonality mean? Well, throughout the year, there are times when you need a lot of energy, and then there are times when you don't need a lot of energy. So maybe you need a lot of energy for air conditioning. Maybe you need a lot of energy for heating. But what about spring when it's not that hot or cold? Or what about fall where it's not that cold and it's not that hot? Well, then you don't demand. So you get sort of peaks and valleys twice a year. Well, what about things like gasoline? What about diesel? Well, there are times of the year when gasoline has a high demand. And there are times in the year when gasoline has a low demand. And it's usually normal. In fact, not usually. It's a normal demand by human activity. To understand the oil market, you have to understand the human. When are you going to take time off of work, strap the children into the back seat, and drive to grandma's house? It's usually the same time every year. Maybe it has to do with weather. Maybe it has something to do with holidays. Maybe it has to do sometime with grandma's birthday. Okay? But you typically repeat. And all humans typically repeat. And therefore, when you look at an aggregate, we all seem to vacation at the same time. We all seem to eat lunch at the same time. We all seem to go to the grocery store at the same time. We all seem to like put gasoline in our car at the same time. We're just average. Yet we all think we're above average, which is cool, right? All right. So anyways, what does this mean? Well, somebody has to make the gasoline. So the oil companies say, all right, looking at past history, when do we hit high demand for gasoline? And they look at it and they know it and they get it through retail and stuff. Okay, great. So they know when people suddenly need a lot of gasoline. Well, and maybe it takes them 3 months to make the gasoline, because what do they need to do to make gasoline? They need to buy WTI or Brent. You don't buy WTI and Brent. Oil refineries buy WTI and Brent. And then they buy it and then they crack it, right? Well, how do they get it? So oil comes out of the ground. Oops, let me get rid of this. And maybe we'll go here. All right, I haven't done this in a while, so this will be fun. Okay, delete. And I guess we'll do it green. Okay. All right, here's the ground. Okay. All right, and the oil is way, 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 way down here. And to put this into perspective, okay, this is a skyscraper. This is like 5 kilometers below your feet, and there's a pool of oil. It's incredible. Landing on the moon is probably easier. Okay, cool. So anyways, you get this oil, and there's sand in it, and there's water in it, and there's gases in it. So the first thing you do is you put it into what? A heater treater. And the heavy oil falls to the bottom. And the water can boil off as steam. And then there's some other stuff in there that we may not want. So now we take it out here, and now we take it to a vertical separator. And we heat it again. And you get tar, and you get diesel, and you get gasoline. And somewhere in here you probably get like plastics. And here you get stuff that goes into your makeup or wherever. And then at the very top you get jet fuel. You heat it under great heat and pressure, and they start to separate. Heaviest things at the bottom again, and the lightest things at the top. And you might do this 2 or 3 times to do it again. And there's little plates here like this, so you can think about it inside, where this oil, you know, it falls here, and the heavy stuff, right, falls to the bottom, and it separates, and then you suck it out into a storage tank. Okay, up here is jet fuel. Up here is gasoline. Over here is diesel. And down here is tar for like road tar. And then you can even burn that up more, take the road tar, and then you burn that up and you create some coke. And not cocaine, by the way. All right. So you do all of this stuff, and it's not easy. It's a lot of chemistry. Now, if you frack, now you got the problem of you go through this process, but some of your oil is too light. And so now, right, then you got to get heavy oil from Canada. Okay. Is there an E in there? No, heavy, sorry. And then you got to blend. Okay. Do you know what you call blended oil? You ever get oil at your oil changed? Huh? You take, and they're like, do you want conventional oil or do you want synthetic oil? And you're like, synthetic? It's made in a laboratory? Is it special? And they're like, oh yeah, it's way special. It's so much better for your car. It's 30% more money. You're like, 30% more money? And then the guy says, well, if I was you with such a nice car, such a pretty Porsche, you must have synthetic. And you're like, really? You know what it is? It's American fracked oil blended with Canadian heavy oil. They just blend it together to be the same as the other oil. But it's synthetic. No, it's just blended. Some light, some heavy, yada, yada, yada. Whatever. It's special. Okay? But the point is, this is not easy. This takes time. So when you're putting gasoline, which is this thing here, oops, we take gasoline out of here and we put it into this tank, and then it's got to be put into a truck. Okay? And then it's got to go to the retail, that kind of stuff. And then you're pumping it in your car. Dude, seriously, it took 3 months. So what I'm trying to say here is, if you understand just the very, very basics, you can front run all of this, because you know when most people go to grandma's house. By the way, I just drove all across southern Spain. Nobody is out there. Nobody. The freeways are so empty. And I think Europeans can't afford the gas and they can't afford the tolls. And I'm like, this can't be good. Nobody's going to grandma's house this year. It was weird. I'm telling you, on a holiday weekend, I drove hundreds and hundreds and hundreds and hundreds and hundreds and hundreds and hundreds of kilometers around southern Spain. It was like flying a ship through space. Just an empty vacuum. No economic activity going on. Oh my God, it was weird. I tried to get off, I'd get off the freeway once an hour, or the highway. I'd get off once an hour, maybe every 90 minutes, to stop at a gas station and talk to people and check out prices. What are the prices in Portugal compared to Spain? And what about this city versus that one? And what are they growing? And, all this kind of stuff. And, the cities and what choices are they making is, fabulous. It's just empty. Master Trader says, beautiful weather. We had horrific weather. It was horrific. Yeah. Yeah, it was so funny. But anyways, that part of the world was beautiful. So going back to this, you start to understand the market. And suddenly when I can casually teach you when to buy oil, the rest is just for you to make a decision. I can teach you the when is normal. I can teach you why it happens so that you understand it. It's not like magic tricks. And then the rest is just technical analysis. Do you understand that? Like, it's only technical analysis. And psychology. So, for example, is this a good, let's say I say somewhere in this period, let's say February to April. Let's just say I've taught you that somewhere in this window of time, normally the market turns bullish. How many people have learned this from me? I have something like a 16-hour course on trading oil. Like, you will become an industry expert by the time you're done that course. I loved it. It's probably the most favorite course I've done. Okay, so if you know this, the rest is you. Now there's only you. You have data and historic data and logical data. So the rest is you. Okay? Somewhere between February and April, you want to buy. Okay? Does this look like a good buying opportunity? No. Does this look like a good buying opportunity? No. Does this look like a good buying opportunity? No. Does this look like a good buying opportunity? No. Does this look like a good buying opportunity? No. Does this look like a good buying opportunity? Yes. Does this look like a good buying opportunity? Yes. Does this look like a good buying opportunity? Yes. Okay? And off we go. And you should also know when this historically tends to stop, just like this historically tends to start. No. Marvina says, do oil fields tend to refill? No, the way that it works, and there's, I think I do 2 hours on geology in this course. But, you know, you have the ground, for example, and in the beginning of the course, you want to look at the layers. Okay, there are layers over time. But at some point, some of the layers break. Actually, I didn't want to do that. Let me put them back. Okay. What happens is sometimes they crack. I wanted to do that in black. Man, I'm struggling with the marker. Okay. They crack and they bend. And then you get some rocks that are impermeable. Okay, and what will happen is, okay, depending, right? Oil can get stuck here, because what is oil trying to do? Okay, because Marvina says there are situations where that can happen, but you'd have to get a geological change. It could just be like an earthquake and it breaks, it cracks this here. And you might have oil trapped under here. Okay, you didn't know an answer to the question, but oil's trying to go up, not down. You're like, it should go down because of gravity. No. You have high pressure here. Heat, the farther you go down, the hotter it gets, which makes it lighter, which makes it expand, which is high pressure, plus the weight of the earth on top of it. So once again, high pressure. Therefore, this has low pressure. So what will happen is this oil can't get out because it's impermeable. But if it cracked, then suddenly it would go kind of this way. And then you'd get some oil go this way. And depending on its structure, like now suddenly you might have a new oil field here. The old one, okay, was only here, because if oil was in the soil but above the impermeable rock, it'll come here and then it'll go there. So suddenly if this broke here, it could just kind of flood. And then very often you get situations where it does this too, based on what's here, like maybe a mountain, and it pools here into a new one. So we cover all the geology in the course. I mean, I'm telling you, it's fabulously interesting. I go over legal contracts and stuff. So like you're a farmer and you find oil on your field, and a fracker comes to do a contract with you, what does the contract look like? What does the lease look like? It's pretty interesting, I'm telling you. That's at Investor Bootcamp, by the way. It's the entire course, all the courses are $88 total. That one oil course is included with the $88. Like, it's so ridiculously cheap. InvestorBootcamp.com. It's so ridiculously accessible that there's no reason for you to not know this. There's just no reason for you to not know this. Anyway, so we go back here and we're in a trap and break. So my next point of knowing that seasonality, that there's a logical pattern going on based on human activity, and the same is with business. Okay, there's times when you spend a lot of money, like Christmas, and there are times when you don't. Maybe you spend a lot of money at back to school. I can predict pretty reasonably accurately when you're likely to buy a new house and when you're not likely to buy a new house, because it has to do with when your children go to school. There's like all these patterns. So once you understand the normal, then you have a benchmark. And then we go back to this year's seasonality, like let's say the stock market, or this year's seasonality for the US dollar. You know what's normal, but then you recognize when something unusual is happening. If you don't know what's normal, then you don't know what's abnormal. And therefore you just, you always react and guess. Instead of making a strategic change, you just kind of randomly guess. And there's no way that that's going to lead to consistent results. And then you notice there are breaks in patterns that might have a pattern in of itself. For example, does the market trade the same in years where the United States may get a new president? We call that election year, presidential election year. Does that year 4 or year 8, does it trade the same as year 1, 2, 3, 5, 6, 7? The answer is no. Well, wouldn't you like to know? Well, at Investor Bootcamp, I did a 2-hour presentation why the Fed was not going to cut interest rates. And I outlined the different shape of this year's market based on the 4th year political cycle. And I did it in January. I charged $4.44. And now I'm rich. Because over 4 million people signed up for that event, and I made $16 million. Actually, no, it was about 100 people. Anyways, I shared that information, and I bought a bottle of whiskey. So thank you for chipping in the $4. I appreciate you. Cool. That's the kind of fun we have at Investor Bootcamp. All the time. Okay? So Marvinus asked, do these oil fields refill? And the answer is no, unless the geology breaks. Okay, and there happened to be oil below it. Okay. Look at this. Look. I told you. Look, I drew it. I said, are you going to short at that price or not? Dude, look. Well, let me just go back. I drew it. I said, are you going to short here? Let me draw it with my tool. I said, are you going to short here or are you going to short here? and it came up to the moving average and now is maybe, dude, seriously? I hope you're paying attention, is all I'm saying. All right. We have a request from my WTI. Oh my God, just that S&P. Look at, I drew this a week ago. I drew this, went on vacation for a week, came back, and it's fulfilling its pattern. Okay, this is not random. I'm trying to point this out. This is not random. This is not random. This is not random. Okay, so my WTI, here's the chart I drew in January, early February. I think it was early February. Okay, early February. And the target is here. We're now here. Well, you know what? I drew it 2 months ago. So please forgive me that we've had 2 days above my target set 2 months ago. And I think it can go up here because it's not a price target, it's a time target. There's still plenty of time. This is just what I drew in the first week of February. And by the way, this actual chart, you notice here, it said the conservative target is here, the aggressive target is way up here, which is like 91. We're now at 87. So there is some room. Here's the conservative target. And we're right in the middle, right? Tradars also came up with this plan. This is specifically a Tradar's plan that it produced in February. This is one of the first that I plotted on charts. Well, one reason is because I already expected it, but to have a technical analyst show me that it's happening confirms what I already believed. So once again, if you don't know these things, you need to end the not knowing. Ignorance is not a defense. These are monthly. These pivot points are monthly. See, I'll show you. January, February, okay, March, April, okay. Okay. But imagine you already were interested in buying as this was forming. That's the part if you already knew fundamentals. Now, what about trading? Do you know how to trade? Do you know how to use pivot points properly? Let's find out. Okay, this is a counter trend reversal setup. This is a buy zone. This is a buy zone. This is a buy zone. So all you had to do was be a bull, and this was a buy zone. Now, in the training course, there's also a time in this period in which I highly train you to be ready. We call it RWA. I do it, I probably mention it 100 times. Well, that can't be true. 45 to 50 times, I think would be truth, that there's a time on this chart when you need to be ready, willing, and able. Ready, willing, and able. Ready, willing, and able. And your opportunities are better at that time than in other times. The other times are valid, but they're good, better, and best. And to know when you should be RWA, I think is important. But if you don't know to beat a bull, then ready and willing and able to do what? Okay? Ready and willing and able to do what? If you don't know you're a bull, you don't know jack. Well, Wayne, I wait for the MACD. Uh-huh. Cool. Now, Eric wants to know about selling gold. Well, you missed the whole beginning of the presentation. Seems like. Okay. Why? So here's what I have plotted. Okay, you ready for this? Up, down, up, down, up. Okay. That's what I have plotted. Oh, thank you, Bruce. Spain was wonderful. Portugal was wonderful. Yeah. Yeah, Holy Week in Andalusia is really something else. Really something else. Also, you know, I went to Gibraltar. In fact, I still have the tag on my wrist. Right. I went to the top of the rock. And I had the best fish and chips of my life. Yeah. At the Lord Nelson. Yeah. Incredible. I also ordered their meat pie, and it wasn't that great. Their shepherd's pie. Was it meat pie or shepherd's pie? I can't remember. It wasn't that good, but the fish and chips were really crazy. Yeah. Incredible. Like huge pieces of land, and right, huge pieces of fish, but just beautifully crispy, flaky. Oh, so good. So anyway, all right. So I was bearish on gold for about a year and a half. Why did I go bullish on gold? After a year and a half. So let's say probably 18 months, I'm guessing. Every day, and in particular, if you've been to a lot of my non-farm payrolls, here's how it went down for a very long time. People would log in and they'd be slightly rude and they're like, what do you think about gold? I'm like, dude, why don't you call a friend? Why don't you ask me nicely? But anyways, what do I think about gold? And I'm like, I don't think anything about gold. Why do you think about gold? What kind of yield does it pay you? Nothing. So what do you do with it? I don't know. You buy some gold and stuff it in a safety deposit box. Is that free? No, it's not free. You have to pay money for it. Oh, so you're guaranteed to lose money. Why? And I give pissy answers like this. You're like, the 10-year T-note was paying 5%. You want to buy gold? I'm like, it doesn't make any sense. Okay? Well, with inflation. Well, inflation's coming down. Why would you buy? We were at 10% inflation, and now we're at 4%. And now you want to buy gold. It doesn't make any sense. Like, why are you buying it in disinflation? Well, I was told you hedge inflation. Yeah, you do. When it's going from 4 to 5, 5 to 6, 6 to 7, 7 to 8, 8 to 9, 9 to 10, that's when you buy gold. But when it's going 10 to 9, 9 to 8, 9 to 7, dude, you have no idea what you're doing. It's like the dumbest investment you could do. Why don't you buy like real estate and have it go up 20%, then hold gold and watch it do nothing? So why did, after all those pissy answers, because honestly, doing non-farm payrolls, I love doing stuff like that because I irk people, I trigger an emotional response, and maybe 5% of the people that hear me take the emotional response and they grab onto it and they learn. Everybody else, they're just going to disappear anyway, so why should I care? Wayne, tell me what to do with gold. Half the people don't even stay to hear the answer. They just leave. Like, good. Ghost. No love for ghosts. So you come and go, whatever. But I will piss somebody off, but they listen. Or someone's like, I like the way this guy rolls. And you start to grab onto something. Great. We're going to be best friends. I'll know you 20 years from now. And everyone else will just disappear. And it's no sweat to me. So why am I suddenly, after all that time, bullish? Well, what's happening to inflation now? Falling or rising? Yeah, you're right, Kyle, but you know it's out of love. It's out of respect in a way where I know you can handle it. You're learning advanced jiu-jitsu. You know how to take a punch. You know how to be thrown onto the floor and get back up. Everyone else cries. Oh, my broker's trading against me. Well, switch your broker to Trader's Way. You'll be fine. What's the big deal? Right? Yeah, well, we got to get to the reality if we're going to trade. All right, so no one wants to answer. Okay, why? Well, first of all, inflation's going up, not down. Okay, we've had 2 months in a row of inflation in the United States going up. That's reinflation. We've lost our disinflation. And in scenarios like that, you buy gold. Now is the time to hedge. Not when inflation's falling from 10 to 9 to 8 to 7 to 6. Dude, it's not the time to buy gold. But now you could, because now it's the time to hedge. Now, maybe there's better things to do, but you could. Now, let me show you. Okay, let me show you. Let me bring this across. Okay, let me show you. We go to, the historical backtester. Let me show you what went down 2 months ago if you were a member of Quantbox. Okay? $80 a month, and suddenly you're trading like an institutional hedge fund, like a multi-billion-dollar fund. $80 a month, and you have the same information as an institutional hedge fund. Multi-billion-dollar fund. So you either love everything I'm throwing at you, or there's nothing more I can do to help. Because this is ridiculously powerful. So let's go to gold. I might not even be able to go back that far into the future. Into the past, I should say. Actually, I can't go back far enough. Can I go back to February? For us, this is old data. We've already done all this. Let's see. February 1st. Will it do it? April. Let's see if I can fit it in there. Oh, good. All right. Right here. Okay, right here, Quantbox went bullish. Quantbox went bullish on gold, XAU. Quantbox went bullish. Let me give it one more click. Here. You would have known, based on quantitative analysis of 20 years of data, right here, right there, no joke, no holds barred, bullish. Holy crimoly. And before that, I was laughing at people that wanted to buy gold. Ha, ha, ha. Why do you like to buy gold? I don't know. I just like to buy gold. Ha, ha, ha. You don't know what you're doing. Why don't you buy a treasury? Well, right around here, I think I sold treasuries. Anyways, actually, no, I bought a treasury at the bottom, which was selling yield. But anyways, so ha, ha, ha. Doesn't make any sense. And then right here, click. There's even a triangle. You see the triangle? Click. Game on. Master Trader says it does separate those who really want this data. So I'm convinced that there's going to be a human divide, and it's happening right now. You need to trade. It's the choice, the blue pill or the red pill. It's over 1,000,000%. My average return is about 1,000,000% a year. Okay, cool. Going back to this. We're the blue pill, red pill. We're making a choice, and there's a divide. And you saw this in the early days of the internet. Lots of people were slow. You've been also given a choice with crypto. Oh, they're all a bunch of shitcoin scams, or it's the wave of the future. Oh, I don't like Bitcoin, but I like blockchain. Remember all of this kind of stuff? And you're given a choice. Fiat currency versus a digital currency. Right? Okay, great. And now the next new choice is artificial intelligence. You accept it, you adopt it, and you incorporate it. In particular, maybe not in the rest of your life. I don't know about that. But as a trader, as an investor, as a financial market wizard, you say it's all crap and hype, or you adopt it because you're like, oh my God, I can spend $80 a month. What is that, $1,000 a year? Okay, $1,000 a year to get something that used to cost $250,000 a year. Do you understand that? You grasp that immediately. You can spend $1,000 a year or $250,000 a year. And you make a choice. Or you're like, it's all garbage. And now right, and I'm talking about Quantbox. Quantbox, to me, provides $250,000 a year in value, and it costs $80 a month. And I am not exaggerating. That is 100% my opinion. The second one is Tradar's now, which I just launched. And it's beautiful. It's so beautiful. I couldn't imagine how good it ended up being. It's another game changer. And so I don't know what you charge a technical analyst, or what you pay a technical analyst. Not $250,000, but let's say in New York City, $150,000, $180,000. Okay? So again, I can deliver to you right here, right now, $180,000 worth of value to your Forex hedge fund. And I'm going to charge you $80 a month. And you're like, Wayne, that's too much money. I can't help you. You're gone. You've fallen off a cliff because you're making a choice of like, you're not going to be an adopter to get big with your intelligence. Your trading and investing is going to come down to the amount of intelligence available to you to make informed investment and trading decisions. So if you're like, Wayne, I don't have $80, get a night job. Start driving for Uber. Okay? But just randomly trading, watching that YouTuber turn his $500 account into a $5,000 account. And he's like, look at me, I'm driving a Lambo. Dude, you're doing yourself a disservice. Learn how to run a business. Your hedge fund, your Forex trading is a hedge fund. It's a business. You need to be a business, man. So you got to think about long term. You got to understand your risks, but then you also have to stop being amateur, and you got to get big, not on risk. You got to get small on risk. You got to get big on information so that when you look at $1 billion hedge fund in Singapore and they're on the other side of your trade, you're at least as informed as they are. At least. You might actually be more informed. You might make better decisions, and you will increase your probabilities, one would assume, of success, or at least repeatable, discernible patterns and strategies. So you either say, you just drop everything right now and you're like, I need this. I need these tools. And you're on board. And others will just he's a scam artist. He just wants to get rich. Then go think that way. I can't help you. There's a mental and emotional disconnect. Maybe you were burned by other gurus and stuff. Well, I can't, right? I'm not your priest. I'm not your counselor, and I'm not your bartender. But I can be a friend from time to time. Right? So holy smokes. Holy smokes. So going back to what somebody said earlier, the way I was teaching price action was just like somebody else. I'm like, well, there is only one way to teach it. There's only the truth. I don't call it truth. I call it universal truth. It is. And if there's somebody teaching something that has deviated from that, I don't think it's true. So when I first started trading Forex, there were no gurus. YouTube hadn't been invented yet. There was no training courses. There were no books. There was nothing. I'm telling you, nothing about Forex except FXstreet. Okay? And within months of me finding FXstreet, I was a speaker. Why? Because there were no gurus. And we're like, dude, somebody actually knows how to trade Forex? You should work with our community. I'm like, I'd love to work with your community. The very first Forex trading expo in the world, I was a keynote speaker. But I'd only been trading for 2.5 years. But that made me a world foremost expert on retail Forex trading. And by the way, many of those speakers are still around, which are, right? Todd Gordon, Ashraf Ladi, anyways, these were the first. But now you go on YouTube and there's kids that are bragging they've been trading for over 4 years and they make 50% a month. And I'm like, they don't understand how stupid that is. So I'm still here. I'm like, I still want to just, like what Harvard says, veritas. Right? The power through truth and knowledge, right? When I graduated, they gave me a lamp because I'm now Illuminati. I love it. I have that lamp upstairs. So I'm sharing everything I know. When I started FX Bootcamp, which is now Investor Bootcamp, it was through a tough, bad period of my trading career. I'd quit my job as a VC. And I was trading day and night, night and day and night and day. And then I went through a tough period, AKA drawdown. And it was devastating on the emotion side because I'm like, I gave up my killer job and my benefits and my office. And I loved it. I had a kick-ass life before Forex. And I gave it all up. And I'm like, and all of a sudden I'm working 20 hours a day and losing money. Have you ever been in that situation? It just feels horrible, right? So I stopped everything and I went on a business planning retreat. And in the business planning retreat, I asked myself, well, why is it that I was so successful before Forex? And why am I failing now? And I was lucky, I suppose, that I was successful. So when I was an investor in the Silicon Valley, I had been in national newspapers. I had been in entrepreneurial magazines around the world. There were articles in Canada, in Germany, in Japan. This is all before Forex. This is all before, your Wayne McDonell. There was another Wayne McDonell. I was in the the 1999 Hot Startups issue of Inc. magazine. And if you're Canadian, I was in the National Post, featured article. So what I'm saying is I had this success, and then suddenly I'm struggling in Forex, and I'm like, oh my God, how could this be happening? I'm a winner. I'm a soldier. How come I'm not getting the results I wanted? And you know what I found in my deep analysis, which meant a half a bottle of whiskey and a cigar? I went through all the successes I had in life. How did I get on the board of directors with George Soros before I was 21 years old? After board meetings, the board members would go to the bar for cocktails. And I was too young to get a cocktail. I mean, serious. So how do you get to be on the board of directors with George Soros at 20? I did something that worked. So what was it that I wasn't doing? And I hadn't surrounded myself with like-minded people. That's right, Grind. I'll say it again. I realized as a Forex trader, I wasn't surrounding myself with like-minded people. So I thought, I need a community. I need to surround myself with like-minded people. Why would anyone want to spend time with me? And then I realized there's no books. There's no training courses. There's some DVDs on technical analysis, but it was for futures trading. There was just nothing. And I'm like, oh my God. I'll just tell everybody that everything that I learned through trial and error. See, I'm self-taught. Do you know what I did? I sold an ebook on eBay for $1. I wrote like a 50-page ebook on how to trade Forex. And then in the ebook, I said, I will spend 1 hour with you on, I think it was even before Skype. Was Skype around yet? I'm not even sure. Maybe it was Skype. I don't know. Somehow, I'm like, I'll spend 1 hour with you, and I'll tell you everything I know. And that's what I did. So I sold an hour of my time for $1. And here we are. You can take 100 hours of my courses, and it's $88. It's stupid. But I hope you understand how I got here and who I am and how I roll. And you either love everything I just said, or we can part ways, have a nice Forex career. Right? Who did I come across? One of, like Jim, for example. He might be here, he might not be, but he's been an FX bootcamper for nearly 20 years, since the very beginning. Right? Yeah. So anyways, yeah, you will get truth from me. Even if I have to piss you off, you'll respond emotionally to it. It's part of neuro-linguistic programming. RC Cola, what's going up, man? There's no chromium like... Autochromium is better than Kazakhstani chromium. That's got to be the funniest. The opening of Borat. Our potassium is better than the Kazakh potassium. Yeah. Yeah. Yeah, that's cool, man. Well, there's always a chair at the table for you. All right, so S&P 500 concerns me. Any up is probably going to set up a down for me, so that's cool. Stock market is open. Oh, you want to do Bitcoin? Okay, so I did this 2 weeks ago, or 10 days ago, let's say. This is how I have it trapped. Okay, we're above the daily 21. So when you do this, look, on the long term, this is up. Not opinion. This is not my opinion. You understand? I'm going to teach you how to read a chart. Okay? So I'm like a concert pianist. I can play any classical music you want. I don't care if it's Baroque or classical or somewhere in between. So Bach, Mozart, Beethoven, I don't care. I can play it all. Give me the notes. I can read it and I can play it. Okay, it doesn't make me Mozart. I can just play Mozart because I trained my whole life. So I look at this. This is bullish. Done. That's it. Does that mean it's going to go up? No. But it's way too premature to be bearish. Now, on a smaller point of view, is there concern about the level of bullishness? Yes. So I can be bullish and conservative. I taught AI how to do this, by the way. Nobody wanted to pay for it, so I lost thousands and thousands and thousands of dollars. Nobody wanted to pay $8. So I think the AI is still there. I think it's still active. I got a bill the other day, and I'm like, but I was traveling, and I get a bill from whose AI am I using on that? Amazon Web Services, I think, and ChatGPT. So I get these bills, and the bills keep coming in, but nobody's paying for it except me. But anyways, I taught AI to say, oh, well, this is bullish but conservative. Okay. The amount of information I'm giving away for free is ridiculous. Well, okay, let me cut to the chase. Why don't you sign up for one or all of my services? Investor Bootcamp? InvestorBootcamp.com. HTTP, no. Tradars.co. HTTP. Quantbox. Oh. Okay. There you go. You're in bootcamp. Cool. When you are ready, when you've gone through the training, step up in the value ladder. So I would do it like this. You join Investor Bootcamp. I don't know why I put that so big. It's going to be hard. Okay. You join. This is it. This is how it works. Investor Bootcamp. And then you upgrade to the swing trading group. And then you upgrade to the day trading group. Day trading group. And then you upgrade to Quantbox. And then you upgrade to Tradars. I don't mean to make them bigger. Sorry. I guess it makes sense. Tradars. And then I have a new service that'll come out in near the end of the year. In the second half of the year. I don't know, at the end of summer. Okay? And it's going to be a combination of all of this. Plus a trading account. What if you had what if you had a coach from like the day trading group? Okay? What if you had a quant on your team? What if you had a technical analyst on your team? And what if you had $100,000 to trade? Would you want to join my club? Now you got to get there over time, because we're not. This would fail if you have no patience, no discipline, no knowledge, and you want to get rich quick. I'm not interested. Okay? But what if you had a coach, a quant, an analyst, and $100,000? Okay? Are there coupon codes? No. Okay, this is $88. It's got to be worth $1,000. And I am not joking about that. That's worth at least $1,000. I charge $88. This is $99 a month. This is $199 a month, but includes this. Quantbox, I think it's $80, $79. I think this is $79. I mean, dude, it's so stupidly cheap. Is there a coupon code? No. You probably spend more on Netflix. Okay. Yeah, what is the yield and all this? What I'm going to do is, because I don't want to get into the compliance. I've been through compliance. I don't like having to go through it. It's too expensive. So what I'm going to do is I'm going to fly out and meet prop firms, meet them. I want to go check them out, and I'll partner with one or two or three, and I'll set you up. Right? Whatever the fee for this thing is going to be, I'll pay for the 100,000. It just be part of it. Okay? But okay. Yeah, but there isn't, Stingray. There's no coupon code. There isn't one. I've never generated one. It's probably just a setup issue. There's probably something I have to click somewhere. Master Trader says USD looks like it's going to drop. Okay, you have to answer the why. Okay, it's fundamental. Don't ever say to me it looks like it's going to fall. You think it's going to fall. I bet you it's going to fall. If you can't answer the why, I'm not interested in the opinion, because I'm very anti-opinion. So like, I'm not going to tell you my opinion on Bitcoin, But this chart is bullish. Okay? The second thing is there a slowdown in bullishness? Yes. Why? Because of this. Okay? So is it going to go up for here or down from here? That's your job. Okay? So by the time it's guaranteed, you've lost most of the money. Like, let me show you something that traders can do that's amazing. Okay, check this out. I can go to active trades and say, hey, Tradars, give me a Forex trade with a 75% chance of winning. Oh, I have 1, 2, 3, 4, 5, 6 trades. Okay, cool. 82% chance USD yen 60-minute chart will go up. Here's the probability. Here's the time period. Here's the setup. Here's how long it'll take. There's the chance of going to 151.86. Or sorry, 151.84. Cool. But you're like, but dude, it's only 50 pips more. Yeah. Yeah. You wanted a high probability. It's almost done. You're so late. See, let me go back to this. There was a time, see, the stop is already at break even. You should have been in at 151.20. Well, we know it's not 151.20 now. Well, it's because it was over here in the radars. It was forming. It was setting. What you're supposed to do is do the analysis yourself and say, all right, 28 minutes ago, Euro Swissy looked like it might become bearish. Well, I can tell you right off the bat, I don't like that idea. But we can take a look at it. Okay, and you make decisions. By the time it turns here under active, it's already a fulfilled trade plan. Now you're just moving targets. You're not thinking about now doing something. You're like now doing something. You're like 2 days late. So, right, you always have to be planning for the future. So I don't like the Euro Swissy trade right off the bat, but it is technical analysis. It's not wrong. Doesn't mean I trade it. Why? Well, I don't want to buy Swiss franc right now because the central bank's cutting. Okay? So that's my opinion. So when you look here, Tradar says you got to go to a 30-minute chart, and it says a falling wedge identified today at 9:30. This pattern is still in the process of forming. So you must make a decision. Do you sell it or not? Possible bearish price movement towards support. Okay, 97.5 within the next 14 hours. Okay, it's pretty clear. So what is it doing? Well, it says, look, bro. Okay, bro. Okay, you see it? I already have it on my chart. Now, it's a different technique. I mean, but it's the same idea. Okay, it's the same idea. It's not quite the same. Okay, it's actually looking at it a little more like this. Okay, again, I wouldn't necessarily do it that way, but that's what it's saying. Here it is right here. And that it should drop down to, let's call it 97.37, maybe even lower, 97.37. Okay, so that's a little short-term trade. Do you like it? Well, start making decisions. What are you going to do? So Tradars, okay, has it doing this. Cool. But you know what? That is accurate. That is technical analysis. I don't know if it's going to hit it. Okay. You knew half an hour ago. So let's zoom in. Okay. So somewhere in this move, let me go delete. Okay. Somewhere in this move, Tradars sent you information that said, consider this falling way down here, actually. Okay, well, that's what the chart says. It's not an opinion. It's not guessing. It's not using fuzzy logic. It's not talking to Quantbox. It's not looking at the Central Bank of Switzerland cutting interest rates. It's only technical analysis. It's a small part of the big picture. And then I do this. And I say, okay, you can sell for 2 hours, but I'm a big boy. I know where I want to be in the market. I made a bigger decision than what happened this post news. And my bigger decision I made days ago. And my big boy trade is going to look like this. I still have my job to do. I still make the decisions. Who the man? I'm the man. Okay? And so this is going to move up in the future because it's moving up and to the right. And I might just take it to the upside. Do I take euro? I don't know. Maybe do I want pound? No, probably not. What about Aussie? I don't know. But what about USD Swiss franc up? Oh, yeah, baby. Oh, yeah. So now I take my own knowledge. Like that technical analysis is good. That will probably work out just fine, but it's a day trade. So I can day trade it down and then buy it up as a swing trader. But then if I do maybe something more fundamentally based, combined with the new knowledge that we just got out of the Swiss franc, out of the Fed. Do I even have one over here? I don't have one over here. Let me go to a different one. Let me go to the Swiss. Let me go back to this setup. Where's my USD? Okay. I may just want to get long this. Okay. And look at my rationale. Okay. There was a buying opportunity. And the next one will probably look like this if I was me. Okay. Oh, where's my drawing tool? Come on, drawing tool. He's shy all of a sudden. Drawing tool. You ready? Watch me predict the future. Oh, gosh. Okay. Oh, gosh. Golly gee whiz. Golly gee whiz, Batman. Okay. But going back to that Bitcoin, okay, it's good to have data. So now I'm using Tradars, for example, to point things out that I should be looking at. But I'm the boss. I'm the money maker. So I see that and I'm like, okay, maybe I pick up a pissy little 30, 40 pips, whatever. But now I'm going to get on the bigger trade tomorrow and be on it for 300 or 400 pips, not 20 or 30. Let's say 200 or 300. You see? So I can take the short-term short, but with the long-term long, because I'm still the decision maker. I'm the man. Okay? And these tools are just that. They're tools. Now I go to Bitcoin, and somebody asked about Bitcoin, so I go back to commodities, and I had it set up like this, okay? Let's call this a wedge, okay? Or a flag. We'll call that a flag pattern, okay? Cool. Do flag patterns work? Or pennant. Pennant is the same as a flag. There's flags and pennants. They're similar. Okay? What would you call this pattern? Let me know what you would call this pattern. Please type it into the chat. What would you call this? A flag or a pennant? I'm going to drop some knowledge on you, some facts. Okay? Okay, Kyle says pennant. I'm going to drop some facts on you that will shame your guru. If you have a guru, this will probably shame them. So please respond. Is this a pennant or a flag? Kyle says flag. Or sorry, not flag. Oh, thank you. Come on, guys, let's go. Was there 5 people in the stream? Oh, well, that's to your detriment. Okay, stuff like this, like I don't use patterns. Oh my God. Well, I understand you. Let me say it this way. I understand you because I'm not, or I wasn't. I was a simple, how about this? I was a simple pattern trader because everything to me came down to price action. And I could predict where the patterns were likely to happen, and I would change my behavior around a pattern, but I wouldn't trade because of a pattern. But I have data that quantitatively tells you the quality of these patterns. So it looks like most people said pennants. Okay, let me now ask you, does this pennant suggest up or down? Now, Andrew, you can say triangle, which is a form of a pennant. You can go with that. But there are slight differences, and I'm going to have to do a training course on this because we need to know the slight differences. Stingray says up. Grind says not completed yet. Yes, but you're the person that's supposed to be prepared. So if you had a fundamental bias, or if you had a long-term bias, you would trade the bias as the tiebreaker. But you can't say, I can't trade it because it hasn't completed yet. Well, then you're never going to get into a trade. Okay, most people say up. Check this out. Analyzing in cryptocurrency, Tradars has seen pennants 427 times, only in crypto. 232 times it worked for a 54% level of accuracy. It's not reliable. It's not reliable. It's not reliable. It's not reliable. There's no reliable outcome. Out of 427 occurrences in crypto, just in crypto. It would be different on oil and gold. It might be different in Forex and the stock indices. Okay, so you go to Forex and you're like, show me the pattern. Oops. Okay, show me the pattern in Forex. We go to pennants. 57% of the time, it's a coin flip. It's not good enough for you. It's not tradable. There's a high probability of failure rate. You should fold your cards and walk. Do you understand that the AI is looking at thousands and thousands and thousands and thousands and thousands of patterns on multiple time frames in multiple markets, on multiple asset classes, and it remembers everything it sees. And I can tell you the reliability. I can tell you the truth. So your guru is like, well, this pennant flag, well, that means a continuation and it's going to go up. No, it does not. I call bullshit on that one. But I can tell you what works really well. Ha 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 ha. Ha ha. Holy smokes. Drop the mic. Think I'm done. That's it. I'm done. Thank you, FX Street, for hosting for the 216th month in a row. I think we're turning 18. Are we turning 18 soon? Next month, right? 18 times 12. 216. No, it's today. Today is our, right? Today is our 18th birthday. Cool. Happy birthday, FX Street. Happy birthday to you. Happy birthday to you. Happy birthday. Yeah, sweet. So, hey, look, I got nothing but love for you, babe, but I got a jump that was real. Thank you to FX Street. Thank you to the moderator. Thank you, moderator, for moderating better than any moderator is moderated before. Other moderators look up to our moderator and say there's nothing moderate about that moderator. That moderator is an extreme moderator. Thank you to you for being here for 3 hours. I appreciate you. Have a wonderful weekend. I'm around. I've been always around. I've had the same email for 30 years. I've had the same email for 25 years, the same Gmail for 35 years, and the same phone number for 40 years. I'm around. I'm available. I'm real. And I want you to succeed, and I hope you know that. Your success doesn't hurt me. So I hope you can talk loud, walk proud, be confident, and take care of yourself and your loved ones. The world needs a hero. The world needs a hero, and it might as well be you. Your family's looking up to you. Your community's looking up to you. And so you'll need to make the tough decisions. You'll need to be the one that does the work. You'll need to be the one that's more prepared than everybody else. Okay? Somebody's got to build the ark. So peace on earth. May the pips be with you. May your profits be above average.